Welcome all to the Node, your place for news, interviews, and education. I am Mike, aka Veteran Crypto, and we are here Monday through Friday, 9 a.m. Pacific, noon Eastern, and bring you in the first half of our show news, whatever the hot news is for the day. And in the second half, we do deep dives. Right now, we're going through the top 20, 50, and 100 by market cap and doing deep dives into the tokenomics, the utility, what it is that these different projects are doing. And we're actually building out with the material. So we're doing videos and, PowerPoints, slideshows, things like that. And we're actually building out a library or repository, for this information so that you can go through and learn about these different projects, with structured content. So with that, I am going to jump. Hey, what's up, Ellie? What's up, Nasty in the chat? We got a good amount of people jumping in on the get-go. So I'm going to go ahead and jump into the socials while we're waiting on David. And I will introduce where you can find us. So if you want to join the chat and ask questions, chat with other people, or if you want to tell us we're full of shit, or show us that we're wrong about something. If we're talking about a project and you know for a fact that we're wrong, we are open to information here. We are not maxis on any projects. If you can show us, where we're wrong about the tokenomics or the fundamentals or, on anything, we genuinely enjoy you showing us where we're wrong. We're here to educate and to be educated. So we just want to make sure that everyone is armed with accurate information and knowledge before they invest in things. We don't care what you invest in. We're not going to tell you that this is the project that you need to invest in or this is the project that you shouldn't. We are just going to educate you on these projects, and it's up to you, what your risk tolerance is and how much you want to gamble. So that's why we're here, is to educate. But if you want to join the chat, it is at the Node Network, all one word. Super easy to find us. If you want to follow us on X, it is at the Node_network. So had to throw a little underscore in there. Somebody already had the Node Network. And last but definitely not least is our official website, thenode.pro. This is where you can find that library, as soon as we launch it. This is where you're going to be able to find that. You're going to be able to find, all of the DeFi University. So we have a comprehensive, from beginner, I know nothing about traditional finance, traditional markets, fiat, banks, all of that, crypto, DeFi, all the way up to doing advanced DeFi strategies. And we offer it at no charge. We do not charge for it. I cannot stress that enough. Again, we are here to educate. Yes, we do have paid products if you want to take it to the next level. But all of our entry level information and all of our entry level stuff is no charge because we want to show you the value that we bring. And then if you want to support us and our mission to educate others, it's up to you if you want to do that with your wallet. But one thing that we do ask, no matter what, is please like, follow, and share the streams that you find valuable, so that other people can benefit from what we do here. How's it going, David?
Doing well, Mike. Doing well. Just getting started with some coffee, man, and thinking about what I want to put together for the deep dive research. Earlier today, I was thinking maybe some meme coins. Something like Shiba Inu and Doge.
No. No, I don't want to waste our time or other people's time with damn meme coins.
Well, I put together some research on Plume first, so I was thinking that we could run through that first. It was actually quite interesting.
That's a little better than a meme coin.
So I'll tell you, Mike, I like Plume after going through the research. I like it.
Dude, I'm telling you, it's a double-edged sword because everything that you've said about it is accurate. that hemorrhaging of TVL and things like that. But then if you look at the project itself, and it doesn't mean it's going to be successful, but you look at what they're building and the things that are going on with it, I can't help but be bullish, but it is no guarantee. So we'll get into it. But that's interesting though, that you had a change of heart after looking at the
Oh
content.
yeah. Oh yeah. I went through yesterday during the private session. Went through the research on Plume, and I gotta say, man, I really do like it. The only problem is that there's really no connection between, what's going on the chain, which is great, and then
Yeah,
that token. Like that's the problem for me.
there's
You
there's
know,
very there's very small utility for the token in the ecosystem. When it comes to like that PUSD and how it plays into that. But yeah, it doesn't have the best tokenomics. It's a little better than Ondo and XRP and stuff like that, though.
I would hope so. I mean, it definitely is. It definitely is better than Ondo and XRP. But yeah, no, I mean, I liked it. I thought that the ecosystem itself, it seems like it's built on top of Arbitrum. So
Yeah.
yeah, no, I quite like it actually.
Well, let's actually. You know what? How about you walk us through the website, because you just did a major revamp on it, and I want to make sure that people understand how to navigate this. So if you want to go ahead and just kind of narrate through this. This is the homepage, and then I'll just scroll through it. And
Yeah, sure. I mean, it would be a little bit easier if I just
yeah,
share
go
my
ahead.
screen and we can run through this together. So here's the node.pro. This is our website, and as you scroll down through the homepage, there's a couple of things that I just want to make everyone aware of. So number one, if you want to hop on a call with me, or just to talk about private coaching, we can definitely do that. It really comes down to, if you want to build a skill set and speed up the pace at which you build that skill set, then we might be able to work together. Maybe it really just depends on what you're looking to achieve. So if you want to book a no cost discovery call, you can do so here. The learn section in the website, this is really where all of that no cost educational material lives. And as you take a look through this, it's meant to be focused on beginners, like beginners focused stuff. So if you run through the DeFi high school, every single one of the courses in here, we're taking a look at the introduction to DeFi course right here. Every single one of these lessons has a podcast, a video overview, nice pictures. So if you don't want to read too much, you can just take a look at the pictures. But no, this is extremely high quality material. And I built this out over the course of several months. So this is really good stuff. If you want to build a skill set and you don't want to pay someone to help you build that skill set, you can do it yourself right here, just with all of this no cost educational material. If you take a look at our communities, we've got two of them. It's Discord and School, and you can join those communities. They're no cost. You can join Discord and School at no cost, but you can also join the private member Q&A calls that are every Monday, Wednesday, and Friday, and that's $100 a month. And you can join that either through YouTube, through Discord, or through School. That's going to bring you to the same private Google Meets call. So that's actually, Mike, where I was going through the Plume content yesterday, was during that private call, and I found it to be very interesting. I really did like Plume, the newsletter. So still working on this one. It requires like two more APIs until it's really, really working properly. I just set it up yesterday with Google's Gemini 3.5, and that's, for whatever reason, it's not quite there yet. Very, very close. But if we just take a look at this together, so you can create your own watch list, and you can see here in my account page, if I sign in, you'll be able to see that I've actually got, oh, you know what, is this, did this die again? So I need to, there we go, perfect. So you can see that I've got my newsletter active, and if I go into the newsletter page here in my account, you'll be able to see, okay, well, I can add all sorts of different assets to my own watch list. And
now
then
it's
the
not
new,
just crypto. You can do stocks, you can do commodities, the S&P 500's included. There's a lot of different things you can add. But sorry, go ahead.
Oh yeah. So you can anything that's got a ticker symbol, you can add to your watch list and then generate a newsletter that is sent to you twice a day. So before the market opens at 9:15 a.m. Eastern Standard Time, and then after the market closes at 4:15 p.m. Eastern Standard Time. So if you want to just take a look at the brief, let's see if this is going to generate properly today. I don't think it's quite ready. Very, very close though. Okay, so it's talking about extreme leverage, dark spot flows set the stage for a violent long squeeze. So I don't know that I would describe, the little move to the upside out of Bitcoin as a long squeeze. But notice here, you've got all of these links. So one thing that I was working on yesterday was making sure that the links all work. And that is a little bit difficult here, but I think it's working now. You've got a market
Well,
snapshot.
that I mean, it's so important, and that's one thing I love about our newsletter is the hyperlinks. So the information that it gives is super valuable. But being able to go to the links of where it's getting that information and verify that it's accurate, that is what's valuable. So not having to search over the internet and find all these little bits of information, having it boiled down for you in the newsletter, and then you can read through it and take it at face value. But things like if you're thinking of entering a position or you're thinking of buying into an asset, you might want to go deeper. You might want to make sure that you're a little more educated on it before you actually deploy capital. So that's what I find so valuable about it.
Oh yeah, and having everything in one place so that you don't have to go and read through 20 different publications in the morning to get abreast of everything that's going on in markets.
You said breast.
So yeah, I mean, we've got our newsletter, we've got our private coaching, we've got our communities, we've got all of the educational material, and then if you take a look here, of course, we've also got our store where you can, pretty soon we're going to have, maybe today or tomorrow, we're going to have all of our new merch up there, and then of course we've got all of our original shows. So there's a lot going on the website, and you can create a free or a no-cost account. And then after you do that, you'll be able to, track everything from within your account page. So the newsletter, the courses, the store, and any orders you might have, you can all track it. You can track everything from within the account page. So there's a lot going on the
And
website.
we're even talking about doing a node calendar. So me, David, and Jeff in a speedo.
No, thank you. But yeah, no, I mean it's definitely come a long way over the last 8 weeks. The website's gone from basically non-existent to something that actually works really well, and I quite like what we've been able to build together so far. And I think it's really just a matter of making sure that all of the products are finished and tip top, and then I think that people are going to be able to get a lot of value from this stuff. Right now, if you want to just get started building your skill set, the place to do that is going to be in the no cost courses in the learn tab up here. That's really going to be the place to do this. So there you go.
Hey, Wispy, I did a spread for Playgirl back in the day, and I went under the name Mike Honcho.
Yeah, man,
Oh,
this is good stuff right here. And so Mike, for the deep dives today, definitely,
oh,
I think it's going to be valuable for everyone just to be able to learn more about the Plume network, and
yep.
really how the Plume network is valuable, but that token is a bunch of garbage. Like it's not connected to what's going on the chain. Um,
There is connections, but very, very few. Very, very
yeah,
few. Yeah,
yeah. So
it's slightly better than the reason that I'm investing in Plume is because of how you can use it with staking and on a lot of the protocols that are on that chain. So that's really why I'm investing in it. Is its utility in the protocols, and to where you can get the PUSD, and you can use that since it's backed by USDC. It's compliant with US regulations. The Plume organization has had, and I'm sure you'll get into this, has actually had quite a part in U.S. legislation. So, up on Capitol Hill, educating legislators on DeFi and RWAs and things like that. So we'll get into that.
Awesome.
I'm sure. So let's get into the news real quick. We got about 45 minutes. So I was going over and found something super interesting that I haven't heard anybody else mention. Not to say that they haven't, but it has to do with the Clarity Act. So I found this loophole that Allbrooks, Tillis Allbrooks, put in. Senators Tom Tillis, Republican from North Carolina, and Angela Allbrooks, a Democrat from Maryland. I love seeing this. The two parties working together. But there is a loophole for a stablecoin yield, for that static stablecoin yield that they banned. So they're rewritten. Section 404 bars crypto firms from issuing rewards that are economically or functionally equivalent to bank deposits, but it explicitly leaves the door open for platforms to offer other forms of value through membership or loyalty programs. So the traditional banking backlash, Wall Street is pushing back hard. A massive coalition of bank trade groups, including the American Bankers Association and the Bank Policy Institute, issued a joint statement warning that this loophole will let companies like Coinbase bypass the yield ban entirely through creative brand tiering, according to a detailed breakdown by Banking Dive. Bankers are furious that the compromise doesn't fully choke off passive retail rewards. So what this tells me is if you have a Coinbase One account, that $30 a month where you can get the Coinbase One card and all that stuff like I got. If it's a membership, then according to this, that is a loophole to where if I hold my USDC on Coinbase with a Coinbase One account, then I can earn yield. So I thought that was pretty freaking interesting that that was written into the Clarity Act, and it passed committee and is moving forward.
So, what I find so interesting about this, Mike, is it's focused on two words, just two. So the loophole is based on the word solely and activity, which is like they're going to see. This is why it's going to require some court cases after this, assuming that this Clarity Act gets passed. Then it's really going to require that there be a handful of court cases to really set the precedent and nail down what this language actually means in practice. So what I'm reading here is that the current draft of the Clarity Act, it prohibits platforms from paying rewards on passive stablecoin holdings that are, quote, economically or functionally equivalent to bank interest. Now, if we just pause there for a second and think about what that actually means, what that means is that we consumers are getting screwed by our legislators in Congress.
And not in a good way. And not in a good way.
They are not representing us, man. They're just not.
Let's be honest. Do they ever?
I can't think of a time when they actually have. I mean, look, if you can, it seems like the thing to do is, go into Congress where you get paid $180K a year. And hey, there's nothing wrong with $180K a year. That's a lot of money. But how in the world can you go into Congress broke, make $180K a year, and after 5 years be worth $10 million? Like, that Marjorie Taylor Greene, whatever that bitch's name. Like, how in the fuck do you go into Congress and then after 5 years in Congress, you're worth millions of dollars, and then you go buy a house in Costa Rica? Like, make that make sense.
Cortez had a shit. Her credit was so bad that nobody in DC, the DC area, would rent her an apartment, and she was, I think it was like 20 grand in debt or more. Now she's worth like 20 or 30 million dollars, and she's
So
it's like, make that make sense. And she's the one talking about, eat the rich, and trying to demonize successful people when
yeah, yeah, it's horrible.
when she's getting paid, obviously getting paid by him.
It's absolutely horrible. And, it seems like it's not just happening on the Democrat side. Of course, the Democrats are communists, so they're going to do shit like that. But it also happens on the Republican side. And so now for me, I'm just thinking like, okay, if voting actually matters, if your vote actually counts for something, which I don't think it really does, but let's say it does, then when you vote in a Republican, a congressperson, it's basically like, okay, well, how badly are they going to betray us now?
Yeah.
Like with the Democrats, like, of course, they're communists. So, like, they're going to do horrible, evil shit. But when you vote in a Republican, you would kind of expect, like, hey, please don't be horrible. But they just turn out to be, like traitors too. And when I'm
Oh,
reading the
there's very little difference between the two parties.
And so when I'm looking at this
So,
Clarity Act, Mike, this loophole, it's literally based on one word. It says the word solely. So
mm,
that word is going to carve out exceptions for rewards, and those rewards are going to be tied to activity and transactions and platform loyalty and membership programs and tenure and duration. So, just keep in mind that it has not been passed yet. It has not been passed into law yet. So, we're still waiting for this, but it's really frustrating for me because when I read this legislation and then I think to myself, well, we don't need a law to tell us what type of rewards we can earn. It's very, very frustrating, man, because look, if these companies, Circle and Tether and all of the other stablecoin issuers, they own US treasuries, and those treasuries pay like, let's call it 4%.
mhm.
Those yields should be passed along to the token holders. If you hold USDC or USDT, you should be able to earn like 4% on that token. And the
Mhm.
fact that it was made illegal to earn yield like that by the Genius Act, that just tells me that, the Congress people that we have do not represent us. They represent banks. And
Well, some
now,
of them represent us enough where they wrote in a loophole, so that's awesome.
I mean, it seems like it's by accident.
And so, check this out. So, Ray in the chat, thank you very much, Ray, for looking out for the community. A little warning: if you get in your Bifrost in the collectibles, there's a warning NFT. Your funds are compromised. Don't take that warning serious. It is a scam. It looks like he looks like he might have lost his funds. The AI service bot on Bifrost will say that you take the serious. Sorry, this isn't making a whole lot of sense, but um, yeah, your Bifrost wallet. Be careful. If there is anything in your wallet that you didn't buy or like get an airdrop of because you were farming an airdrop, if 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 there's any question where some assets came from, do not interact with it. There is plenty of scams out there, and if you interact with it, it could drain your wallet.
Yeah, just don't touch them. You know, I can't tell you how many scam tokens I've gotten. It's like too many
Oh,
to count.
dude, twice now I've had it to where my wallet says I'm a billionaire. And people that might not understand, they'll go and try to cash that out, and it's a scam. There's no liquidity for you to cash out anyway, but they just pump the token so it looks like you have a bunch of money, so you'll go and try to cash it out, and then they drain your wallet.
Yeah, so here's the thing. The only operation that you should be doing with any of those scam tokens that pop up in your wallet is burning them. But really, all you got to do is nothing. Don't touch them, don't interact with them. If you're going to, then find a tool like on Solana, I think it's called Soul Incinerator. That tool you can use to burn any of those scam tokens or scam NFTs. On EVM chains, I don't know of a burning tool on EVM chains. I don't think that there's one built into Ravi. Maybe there is that I might not be aware of. But yeah, so I would say, do not interact with any of these tokens ever. There's
Yeah.
no benefit to you. And look, no one is ever going to airdrop randomly like value into your wallet. You're
No.
you're you're not getting real value from these tokens that get airdropped or NFTs that get airdropped into your wallet, unless you did some type of operation specifically to get an airdrop.
Yes. Like
Otherwise,
Jeff on the blockchain report that's after this show on on a couple days a week. He teaches how to do that stuff. And so, yes, if you went and you helped, with a protocol or a chain to, help them go through and, find bugs and, things like that. If you farmed an airdrop, that's different than just tokens showing up in your wallet. Now, I've gotten airdrops from having my BE Aero locks because of new stuff that popped up on base network or something like that, or even I got the black hole airdrop because it's a VE33 model. For whatever reason, they just airdropped me a bunch of black token. But you need to understand where it came from. If you don't, do not mess with it.
right, you should never be interacting with these tokens that get airdropped into your wallet unless you perform some operation and you were expecting an airdrop.
And
But yeah,
Jeff highly suggests that you use a separate wallet when you are farming airdrops. Do not use your main wallet that has your portfolio and all of your assets on it. You should always air gap basically, you know so that you're not using your main wallet, because then if it gets compromised in some way, you might lose some of your airdrop, but you're not going to compromise your entire portfolio. It's just it's good OPSEC. It's good best practices to do things like that, and that's some of the stuff that we teach here.
yep, 100%. And it really, when you're building a crypto and DeFi skill set, it really just comes down to, in the beginning anyway, learning what not to do. And that's why it's so valuable to have a mentor who is a professional that's going to tell you, hey, why don't you avoid doing that? Like, let's not interact with that token.
You know what? It might be a good idea if you don't let somebody steal your shit.
Yeah, let's not do that.
You're only going to hear that here. No. All right. So it looks like the White House stepped in a surprising twist that weakens the banking lobby's position. The White House Council of Economic Advisors released an empirical study on the macro effects of banning stablecoin yields. The findings: banks argued that stablecoin yields would cause catastrophic deposit flight, destroying local lending. However, the official White House analysis concluded that a total yield ban would only boost traditional bank lending by a negligible 2.1 billion, a tiny 0.02% of outstanding loans. You can read the exclusive data and full methodology. There's a link that I can post if anyone's interested.
Yeah,
Uh,
so Mike, I'm reading about this, and the more that we read about this, the more that I really come to understand that we are getting so screwed by our representatives in Congress. It's really really horrible. So they're talking about this deposit flight.
hmm.
It's bullshit. It's not true. And even if it were, it
Then
should.
they need to provide a better product.
Right. Exactly. That's the whole point. Like, if a better product comes along, like if you can hold stables in your self-custody wallet and earn yield on those stables natively without having to do anything, which you should be able to, well, then banks need to be able to compete with that product. If they can't compete with that product, then there should be deposit flight. This is what happens when you operate in a capitalist system. You have a new product that comes along that is superior to the old product, and people are going to migrate to that new product. That doesn't mean that it's a bad thing. That's a good thing. It's a good thing for consumers. And banks are freaking out because they're not going to be able to steal from people as easily. Just keep in
Mhm.
mind, the banking business model is stealing. That's what it is. The
Well, they learned
fees.
the best, the government.
Yeah, it's fees, and it takes forever to make most transfers, and they earn float. On the float, they earn yield on that float. So it's just their entire business model is based around theft. And
Yeah.
so when a better product comes along, they're like, "Oh my God, we're going to lose deposits. Help us, government, help us." And
Yeah.
Congress is just a bunch of bitches, and so they're going to go along with it. They're supposed to represent us, man. Very frustrating, I think.
Absolutely. All right. So let's jump into a little bit of traditional finance. So SpaceX, 1.4 billion SEC Treasury disclosure. So the market moving catalyst behind let's see, the S-1 paperwork bombshell. Elon Musk's aerospace giant SpaceX officially filed its S-1 registration statement with the U.S. Securities and Exchange Commission to prepare for what could be the largest IPO in capital markets history. The disclosure revealed that SpaceX holds a massive treasure chest of 18,712 Bitcoin on its balance sheet. The financial data. The paperwork reveals SpaceX accumulated its position at an average price of roughly $35,000 per coin, while the fair value was reported at 1.3 billion as of March 31st. The recent market positioning places the total allocation closer to 1.5 billion, instantly rendering SpaceX one of the largest corporate Bitcoin holders on Earth, significantly eclipsing Tesla at 11,509 BTC reserve. The market reaction. This disclosure hit right as Bitcoin experienced a sharp 4-day losing streak, sliding down from its local highs above 82K to stall aggressively below 77K. The cascading sell-off triggered over 657 million in liquidations across crypto exchanges as long positions were forcibly unwound. So, what are you seeing on? Because I know that everything I'm seeing is that it's official. SpaceX is doing an IPO.
Oh yeah, oh yeah. Not only are they going to IPO, it looks like the IPO is going to be like a $2 trillion IPO, which is just amazing. And what SpaceX is actually able to do is get payloads into space. They are dominating the space industry. I don't know what is this industry called? It's a new industry. It's, I guess, the space or the space flight or the
I would
payload.
say aerospace industry.
Yeah, I mean they're absolutely dominating that new industry. And but here's something that I think
They
about
should just
this.
call it the SpaceX industry because they're pretty much the ones that are running shit.
Exactly. And the thing for me though is whenever you see, at a market high, and the S&P is just a stone's throw from all-time highs. Whenever you see a big IPO with markets at recent all-time highs, it tends to mark a top for a little while. So, it's really, really difficult to say like, hey, this is going to be the top for a little bit, simply because the animal spirits are here. People are buying calls hand over fist on NASDAQ items and pushing that index up and up and up. So maybe at this SpaceX IPO, it could mark the top for a little while, or we could see, a real 1999 style, 1999, 2000 style blow off top for the NASDAQ. So, yeah, Mike, I was listening to Tom Lee talk about this just yesterday. And, look, as much as I kind of dislike Tom Lee, I don't like his voice. That's just me. I don't like his voice very much. But he's been right. He's been absolutely right. He called 7,300 on the S&P, and we're trading 74.23. So he was right to call it on the way up. And what he's talking about now is, maybe we make a move up towards 8,000, something like that. So that would be a monster year for the S&P 500. And we get this SpaceX IPO that could just be another catalyst for further upside. Here's a potential problem, though. Potential problem is the Fed. So we've got this new, Fed chair, Kevin Warsh, and what Tom Lee was saying yesterday is that usually when you get a new Fed chair, the market tests that new Fed chair, and the average drawdown is around 10 percentage points. So that would be just like a really run-of-the-mill type drawdown for the S&P. We haven't seen a real 10% drawdown since last April. Even this recent drawdown into the Iran war, it wasn't even 10 percentage points. It was like 7. We didn't quite even get a 10 percentage point correction out of the S&P before blasting off by 30% or more. So I'm just thinking to myself, with this SpaceX IPO and the new Fed chair, that we might get some type of a pullback at some point, maybe this summer, like starting now. But over the next several months, like, you should not expect markets to really move lower when you see earnings growing by double digits. So when you look at companies like Google, and Amazon and Apple, and you name it, the Nvidia, which reported some excellent earnings yesterday. When you see these companies, these multi-trillion-dollar behemoths, reporting double-digit earnings growth, or even I think the earnings growth for many of these companies has been like 25%. So markets don't move lower when earnings are growing by double digits; they go up. So the problem is, why the hell is Bitcoin, like, it hasn't found a bottom yet? So that Bitcoin bear market, man, it's still got a couple of months left.
Well, I mean, I kind of wonder if, with, the institutional buying of Bitcoin and the way that, they hold on to it, they're not emotional, buyers and sellers. I kind of wonder if, we're not going to see the pullbacks that we have historically. I'm just, throwing that out there. I mean, it's, we very well could, but I just wonder, with, you got Michael Saylor buying it up. We just talked about SpaceX and Tesla, and a lot of other companies that have treasuries, Bitcoin treasuries, that are buying it up. And then you got whales and other people that long term hold this stuff. I kind of wonder if kind of moving forward, that we've talked about it before, that we're going to see a flattening of the volatility. We're going to see a flattening of a lot of the pullbacks in the in pumps in the the bull and the bear.
Yeah, and so volatility has definitely compressed for Bitcoin. Its vol has compressed. So that simply means that we are unlikely to see the same type of bear market drawdown, because with lower vol, the expected move gets smaller. And so I think those Bitcoin ETF products are the reason why we didn't get the parabola on the upside. But I think they're also likely going to be the reason why we won't get true depression on the downside. So yeah, that volatility contracting simply means that we get smaller moves. So maybe we don't get the 75% drawdown from the all-time highs for Bitcoin this bear cycle. Maybe
This
the
asset
trough
is
is in at
maturing.
50. Yeah.
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 So, and this kind of plays into that. So the trending institutional news is centralized exchange evolution and stablecoin infrastructure. So the shift to institutional volume, a newly released research report by global PR and fintech intelligence firm Drofa Comms, reveals that retail exchange activity has drastically slowed, while institutional dominance has reached an all-time high. Total crypto trading volume fell to 5.6 trillion early this year, Yet average daily crypto futures volume on the CME grew by 47% year on year. Platforms like BitGet are now reporting that institutional volume accounts for up to 82% of total platform share. It's showing you, those numbers are showing you that institutions are about the only ones that are in these markets, besides degens like us and the people watching the show right now. So, capitulation, I think that we are close to seeing max capitulation, when it comes to retail anyway.
Yeah, I mean, I don't think that we've quite seen true capitulation yet. Not quite. Um, I mean, the drawdown into
Let me ask you this: what are you looking at to determine, max capitulation, or kind of where we're at in the market, as it pertains to retail?
volume. I'm looking for
Okay.
volume. So if we take a look at BTC here, and I've actually got a screen share running. I want to go ahead and just talk through, what we could expect if we're going to see, true capitulation here. So notice that drawdown, and let me just make sure that I'm sharing the right screen here, and I am. So you see, this is Binance futures, and Binance still is, the king when it comes to futures volume. They've got, I think it's like a little bit more than half of all of the futures volume, for crypto derivatives. So if we're taking a look at Bitcoin, this drawdown here, from what was it, 97K all the way down to 60K, this took place over the course of about 3 weeks. So this drawdown here, notice the volume. We got some elevated volume, and people were calling this move here. They were calling this, some type of accumulation. And it's just, I don't believe this to be accumulation because the volumes are not great enough.
Yeah.
But what I would be looking for when it comes to like a real capitulation would be volumes higher than this. So this previous drawdown that we got from 97 to 60K on BTC, the volumes here were really not elevated, not for more than just a couple of days. So real true capitulation would be marked by big volumes. So
Gotcha.
see this back in the day, this is last bear, we would see, real volume increasing into the drawdown, and then the accumulation, which takes place during the bottom of the bear market.
Gotcha.
That
Now,
accumulation.
can you go back to previous bear and see if it does the same thing? Just if it repeats.
Yeah, so the data that I've got here from this Binance futures chart only goes back to 2017, but during the 2018 Bitcoin bear market, you can see that there was an increase in volumes when we really started to break down, and then
Gotcha.
this capitulation here, we got a big surge in volume. So I would have
Gotcha.
to zoom in to be able to see this more clearly.
Yeah.
But
Yeah.
yeah. So basically, for capitulation, I'm looking for a massive increase in volume here into the fall. That's what I'm looking for. Maybe the Binance contract isn't the best one to look at. I think it probably is, though, because the majority of the trading volume still occurs on Binance futures. So yeah, I think we haven't quite seen that capitulation yet. And it's probably just a matter of waiting another couple of weeks until we get that next leg down. If that leg down comes and volumes massively increase, that could mark real true capitulation for BTC holders. And here's another thing that you would see. You would see fear and greed go to like, sub 10. So it would be very low. People would be, freaking out. Oh my God, Bitcoin's going to
dead.
zero. It's
Bitcoin's
dead. Yeah, the moment that you start seeing, people talking about Bitcoin being dead and Bitcoin's going to zero, and I got to sell my Bitcoin, and it's fake, it's a scam or whatever. The moment that you really start seeing stuff like that, and Bitcoin is, drawing down by, another 20,000 or $30,000, and volumes really increase. You see all those things together, and I think as long as we're getting into the fall timeframe, then I think you could say to yourself, well, it's time to buy. It's time to start buying. And that should also align with altcoins getting just crushed. I think that's really where you can make some multiples, because if you can be patient enough to wait for a real Bitcoin drawdown, like a real capitulation event,
It's
then
it's all about the multiples.
oh
It's
yeah,
all about the multiples.
oh yeah, no, 100%. It really is though, because look, if you're going to take this crazy level of risk, to buy and hold these digital assets, you've got to get compensated. You got to be able to get compensated for taking that risk. So that means you've got to make some multiples. It's got to be like a 5x. Like you got to be, getting a five bagger out of this stuff. So at least, So when I'm thinking about multiples, I'm thinking about altcoins. I mean, of course, Bitcoin going from, if it goes from, a low at 50K and, rallies back up to that trend line, this trend line on the upside at, let's call it 150K. Okay, great. You did a 3x. Love it. Nothing wrong with a 3x. But if you take a look at, the largest altcoin, Ethereum, and if Ethereum draws down to, the $1,300 region, or maybe a little bit below that, and then if it just rallies from 1,300 back up to those all-time highs, if it just does that, then you're talking about putting in maybe like a four bagger, something like Solana. If Solana draws down to that $30 region that I'm thinking it might draw down to, and then just recovers back up to its all-time highs from the last bull market, then you're talking about something closer to an eight bagger, or a nine bagger, getting close to 10 baggers here. And then when you take a look down the list, Mike, your favorite arrow, this thing, if it ends up drawing down to 13 cents or so, which I think would be reasonable, then
You're looking at a 20 bagger.
Exactly. Exactly. You see, this is what I'm getting at, though. Like, this is why, even though I dislike the Arrow tokenomics right now, if they are able to successfully upgrade the tokenomics and all of those upgrades to the platform are implemented, and it looks like they will be pretty soon, then, I mean, hey, if Arrow just runs back up to its all-time highs at $2.30,
Yeah.
after drawing down to where I think there's support over the next couple of months, we're talking about a 20 bagger there. You take a look at something like Pendle. Pendle,
If
right?
if Arrow does anything, I'm gonna be set.
See, I think that there's amazing opportunities in altcoins, but you've got to be very, very selective with the ones that you buy. So
And the tokenomics is key to that. I mean, yes, that you can make money off the pure speculation, but that's a short term. That's why if you were following us on X or you've seen my posts, like with Ondo pumping right now, I just keep on because everybody keeps talking about it going to $5 and $10, and I'm just like, take profits, take profits, take profits, take profits. Same with XRP when it was pumping and it went up to $3 and change. I sold all my XRP at $2, and all the way up, I was telling people, take profits, take profits, take profits. And now it's back down to $1 and change. And who knows, if this plays out like David's talking about, where Bitcoin pulls back into the 60s or even the 50s or potentially even the 30s, then what do you think is going to happen to all these alts, including XRP and Ondo and things like that? All of those gains are going to be erased. So take profits, take profits, take profits.
yeah, you see what Jeff says, the legend of Bagger Vance. That's
Yes.
funny, man. Yeah, we need some baggers. We need
The legend of 20 bagger Vance.
That's right. Yeah. And here's the thing: you're not going to hit a 20 bagger if you're not in the market. So you've got to have some exposure to this stuff. But I think it probably makes sense to just be a little bit more patient here. So if I'm taking a look at BTC, if you can just be a little bit more patient and wait for, if I just go ahead and zoom out here to a weekly, if you can be just a little bit more patient and wait for that last drawdown, this bear cycle for Bitcoin, if you can just wait for that drawdown and then pick up some Bitcoin down at or below 50, and then maybe some altcoins, after another 50% dump, that's where you make the money. You make your money on the buy. So you get a really great entry, and then all you got to do is nothing. You make the buy, and then you sit on your hands for 18, 24, or 30 months, something like that, throughout the rest of the next bull. And then when everyone's getting euphoric and Bitcoin's up at 150 or 170, and people are talking about it going to 250K or whatever, then you sell. Then you realize those gains. It's literally just a matter of being patient, buying the red, and then waiting. That's it. So I'm waiting for this next drawdown out of BTC. And
or at the top, you take out a loan on your BTC, and when the market's tanked, then you pay it back.
Here's what I would do. I wouldn't take out a loan in USDC. I wouldn't take out a USDC loan at the open highs.
No.
Yeah. So what I would do instead, and we can actually take a look at that because that's a great idea. So if you've got your supply side and you've got your borrow side,
short the market basically.
Yeah. So I mean, if you're supplying BTC, right? If you've got BTC on your supply side on a money market, let's say that you're on Morpho and you're supplying, a Bitcoin derivative, right? WBTC or Coinbase Wrap Bitcoin or something along those lines. You supply your Bitcoin derivative, and then if you were to borrow stables against it, let's say that you borrow USDC. Right. Let's say that you were to do that, right? Let's say that you borrow USDC with Bitcoin up here at 150. And let's say that you borrow, a 50% LTV. So if Bitcoin's at 150, then you can borrow $75,000, 75,000 USDC against one Bitcoin. Well, what happens if you borrow at that 50% LTV and then Bitcoin draws down by 50% from the all-time highs? You get liquidated and you go to zero on that lend borrow position. So rather than borrowing USDC with Bitcoin at all-time highs, if you borrow BTC against your BTC at that same 50% LTV, and then Bitcoin draws down by 50%, what happens? Your debt position, your borrow, becomes cheaper to repay. So if you borrow that, right, exactly. So if you borrow that BTC against your BTC, swap that BTC that you borrowed for stables, okay, great. Now you've got 75 grand that you can go do something with. And then if Bitcoin draws down by 50%, the value in no, you do not get liquidated. In fact, your health factor
I thought you said USDC.
No, if you borrow BTC and then swap that for USDC,
gotcha.
You've got this borrow position here in Bitcoin terms. So this BTC borrow, everything is denominated in dollars. So if there's a drawdown out of Bitcoin, but you borrowed Bitcoin, now all of a sudden that debt position becomes cheaper to repay. So you could actually borrow against yourself and make money on the debt side on the way down. So
so basically what you ended up doing is increasing your Bitcoin position, able to cash out on that liquidity to where you can access it and talk to your tax professional. But my understanding is you don't pay taxes on debt, so you don't incur a taxable event, and you can use that liquidity to invest in more assets. So potentially you could buy more Bitcoin when it dips.
Yeah, I mean, you definitely could. You would have to take that Bitcoin that you borrow and swap it for USDC or a stablecoin.
Yeah,
So
to lock in that value.
right, so that would be a taxable event, but, to
Oh,
be
okay.
completely honest, like, you know, who the fuck gave the federal government the ability to say, like, if you
Everything
swap
you
this
do is
coin,
taxable.
like, everything is taxable? Get fucked. Like, really.
Yeah.
Like, go to hell.
Yeah,
That's a
it's like
bunch of bullshit.
you earn money, taxed. You spend money, taxed. You freaking pay something off like your house, tax. If you invest and you make money, tax. If go to the pump, tax. If you die, tax. It's like everything we fucking do is taxed.
Yeah, and, look, man, our country was founded because of, a unlawful less than 2% tax on tea. That was like what kicked off the revolution. Um, and so it's just like, and yet now people work 6 months out of the year for the government. And then they're talking about, well, everyone needs to pay their fair share. Dude, fuck that. Your fair
Yeah.
share is zero. Like,
Yeah.
so who decided that it was a good idea to allow the government to steal from you in everything that you do? Literally everything. Like,
Yeah.
and where does this money go? It certainly isn't going to provide any services that I can qualify for. Like in California, couldn't qualify for shit. Like, but they're going to import illegal aliens from God knows where, the third world, and give them free healthcare with money that they stole from me. And these services I can't even get for myself. So when I talk to people, Mike, around here in Florida about healthcare, and I do it rarely, but if I'm talking to someone about healthcare, they're like, yeah, I can't afford it. um, and yet I know for a fact that in California and in many blue states, healthcare is given out for free to illegal aliens from the third world. So it's just extremely frustrating to know that we get taxed to no end for services that we can't get. It's just like, what the fuck, man? That system is totally broken, completely broken. So, what's Ray saying here? So,
He's
with the
saying,
point you
David, with the point that you said, I think he meant said, to invest in the downside. Do you have some advice for us? Which coin you would pick right now?
none, maybe Tron, maybe just simply because,
It's
Tron.
been it's been fucking pumping on steroids.
Yeah, but its tokenomics are excellent too.
Yeah.
And if we just take a look at TRX on the daily, this one, today, plus another 1.3%, and getting very, very close to that 37-cent level. If Tron gets above 37 cents, then I think it makes a run to 45 cents.
Well, I mean,
Ano-
and correct me if I'm wrong, David, but it's that play that we just went over, or that you just went over. What is what would be considered being long on something? So if you want to increase your exposure to an asset, it's a great way to do it. If you want to do a low loan to value, and buy or lend out an asset, and then use that to get more of that asset. It's a way to lever up.
um, So, could you repeat that, Mike? I didn't quite understand.
So if I'm understanding the mechanics of it correctly, like say Bitcoin, if you have one Bitcoin and you take out say a 50% loan to value, and you use that 50%, because and you took the loan out in Bitcoin, you turned one Bitcoin into 1.5 Bitcoin, as far as exposure. And so if that asset keeps going up, you now have 1.5 Bitcoin. No.
Nope, nope. So here's the way that works. If I've got just a blank space to draw, let's say
Yeah.
that you've got your supply side here, and you got your borrow side here, and on the supply side you supply one BTC, right?
Yeah.
So you got one BTC on the supply side, and over here, let's say that you're going to borrow at a 50% LTV. So maybe
So
you
you have
borrow 0.5
yeah.
BTC. Okay, so you are plus one and minus, this is a minus 0.5. So
So
what's the
why would it be
difference?
minus?
Because you borrowed it, so you're short. So if
Well,
you,
but wouldn't you technically be in possession of 1.5 Bitcoin?
nope. So you're in possession of whatever the difference is between your supply position and your borrow position. So if you
Well,
supplied
but
one,
if you take that point 0.5 Bitcoin and got and bought more Bitcoin, actually go ahead and finish. I want to make sure I understand this.
yeah. So if you supply one Bitcoin, you're
Mhm.
plus one. If you
Yeah, yeah.
borrow zero point 0.5 Bitcoin, you're minus zero point 0.5. So how much Bitcoin do you have on the money market? You've
Yeah.
got zero point 0.5 Bitcoin on the money market, and you've got zero point 0.5 BTC in your wallet. So you do not have more than the one Bitcoin. You started with one Bitcoin, you've still got the one, but when you borrowed half against it, you've got zero point 0.5 on the money market and zero point 0.5 in your wallet.
Well,
So
but if you borrowed zero point 0.5 Bitcoin and you pay off the loan, don't you don't like I mean you get that zero point 0.5. I mean, you get that zero point 0.5 back. So you'd end up with one Bitcoin, your original one Bitcoin and the borrow.
if you start with one BTC,
Yeah.
and you take that one BTC and you go ahead and supply that one BTC on Morpho, let's say.
Yeah, yeah.
So here's your supply position, right? So you're plus one. You've got one Bitcoin delta. So,
Okay.
for every $1 the Bitcoin moves, if you've got one BTC, then your position moves by $1. For every dollar
Yeah.
that Bitcoin moves, your position moves by $1. One delta, one positive Bitcoin delta. Now, let's say that you want to borrow against that BTC. If you
Mhm.
borrow, at a 50% LTV, then you're going to be borrowing 0.5 BTC.
So
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 on
do you
your,
so like you no longer have one Bitcoin on the supply side then?
so you have one Bitcoin on the supply side. So you're plus one.
Do you have does that one Bitcoin have full exposure to the price movement?
Oh yeah, oh yeah. So on your supply side, you've still got the plus one, but because you borrowed 0.5, now the difference between your supply and your borrow, that's what you have on the money market. But in your wallet, this zero point 0.5 BTC, that's going to be in your wallet. So if you've got zero point 0.5 BTC on the money market and zero point 0.5 BTC in your wallet, you still got the one Bitcoin. So you still got the one. So,
Okay.
supplying and borrowing does not increase, the amount of Bitcoin that you have. Now, here's what you can do if you want to, start to employ some leverage here. So, borrowing is a form of leverage, but if you just borrow the zero point 0.5 BTC and it sits in your wallet, then you haven't really levered up your exposure to Bitcoin. If you wanted to lever up
Convert it
your
to
exposure,
USDC.
or what you could do is you could take this zero point 0.5 BTC that you borrowed and then supply it over here as collateral. So if you take
Okay,
that
so loop it
0.5, loop it exactly. So recursive lending. So if
Okay,
you
well, I
if
mean,
you
I fucking learned something today. All right.
good. So if you take this zero point 0.5 BTC that you borrowed and you go ahead and loop that, you supply that. Well, now instead of just the one BTC, now you've got 1.5 BTC supplied over here, and that's plus 1.5. So I'm going to go ahead and X out that original position. So now you've got the 1.5 BTC supplied. You borrowed 0.5 BTC against it. you've still got just the one BTC. Okay, so you've still got just the one BTC here. So if you're borrowing Bitcoin against your Bitcoin, even though this is, it's a form of leverage on the debt side, you're not increasing your exposure to Bitcoin, however. Now, if you wanted to get levered long, what you could do is if you supply that one BTC, instead of borrowing Bitcoin against your Bitcoin, if you borrow, something like 75K USDC against your one BTC, let's say that Bitcoin is at all-time highs, it's at 150K, and you borrow 75K against it, that's a 50% LTV. And then you take this 75K and you go ahead and swap that for Bitcoin, supply more Bitcoin. Well, now you've got a levered long. You are levering up your exposure to Bitcoin. You've still got the same US dollar amount if Bitcoin doesn't move in US dollars. So you still got the same dollar amount, but you're levering up your exposure to Bitcoin. So if Bitcoin goes up in US dollar terms, then because you would have 1.5 Bitcoin of exposure instead of just one, for every dollar that Bitcoin goes up, you're going to make $1.50. So this is just a form of leverage here.
So it's a levered long then.
Exactly.
Okay.
Yep. So that's a little bit about leverage on money markets. And here's the thing: a lot of people don't understand that when you borrow stables against your collateral asset, you're getting levered long. So when people talk about like, hey, I wanna be able to cash out some of my gains, at the top of the bull. And the way that I'm going to do that is by borrowing stables against my, whatever collateral it is, Bitcoin, ETH, Sol, SUI, whatever. It doesn't matter what it is, Tron, Hype, whatever you're putting up as collateral. If you borrow stables against that at all-time highs, that is the same thing as, hopping onto a perpstex and trading perpetual futures with leverage. So if you borrow at a 50% LTV against your Bitcoin, that is the exact same thing as trading Bitcoin with 2x leverage on a perpstex. So just keep in mind that borrowing stables against a collateral asset, that is leverage, and that is you're getting levered long. And so if you are levered long with 2x leverage, then for every dollar that underlying asset moves, your position is going to move by $2. If you are trading with 3x leverage, let's say that you put up one Bitcoin and you borrow against it and you lever that up, you borrow stables against it, and you've got 3x leverage on that supply and borrow position on a money market. Now with 3x leverage, for every dollar that underlying asset moves, your position is going to move by $3. So regardless of whether you borrow on a money market or trade perpetual futures with leverage, it's the same thing. It's the same thing. It's just that the mechanics of using a money market make it seem a little bit different. And that's why people can get confused about that, because if you're supplying something and borrowing something else, that recursive loop can seem a little bit different than trading with leverage, but it's still trading with leverage. So I don't think it's a good idea to borrow stables against whatever your collateral asset is with markets at all-time highs. That's a recipe for liquidation, because if you borrow at a 50% LTV and then that underlying asset moves to the downside by 50%, you go to zero. Your position gets liquidated and you go to zero. And it would actually have to move to the downside by less than 50%. So yeah, just be very, very careful, borrowing against your collateral here. Now, if I'm just taking a look at, some of these assets today, Hype, look at Hype, man. This thing is ripping. So, Hype blew out to the upside to some fresh all-time highs here today. You know, breaking out above this little parallel channel that I drew in there. So hyperliquid looking pretty darn good. Same thing with Tron. Tron looking pretty darn good. And then if we take a look down this list at all of these different alts, you know, I think that those are the two on my watch list here that really look quite good. But you know, if we take a look though at the total crypto market cap, I still, you know, see this pattern, and I think to myself, this is a flag. This is a bear flag, and we're near the highs. So if we fall out of bed here, then I would expect there to be a move down to this horizontal. And you know, if I take a look at so Nvidia reported yesterday, and the fact that Nvidia crushed it, you know, amazing earnings, really they killed it, um, and yet the stock didn't rip. So you know, there was no movement out of Nvidia after reporting.
That's
Um,
weird.
so that kind of tells me that maybe it was already priced. You know, it was already priced in.
Priced in.
Yeah. So if it was already priced in, well then, you know, what could we be watching? You know, for an indication that there might be some type of a, you know, just a small shallow correction here. I'm definitely going to continue to watch crude oil. You know, one thing that Tom Lee was saying yesterday is that he does not believe that the top is in for crude yet because the shortages in, you know, the rest of the world, that hasn't fed into price yet. So just think about that for a second. If the top is not in for this crude oil market, and if there's going to be another push higher out of crude, like Mike, can you imagine $140 or $150 crude? Like, you know,
Dude,
another.
some of the prices at the pump right now, freaking that would crush trucking. You know, the margins, you know, when diesel prices go up, it destroys especially small trucking companies. So you know, and of course that's going to affect the price of goods and services and you know things like that as well. If if crude keeps going up, it's going to freaking destroy people.
And I think that it's, you know, it looks like crude could have another push to the upside. Um, you know, so that's a big risk because the longer that crude remains elevated like this, the higher inflation is going to go, which means, you know, the higher interest rates have to go. So if I'm taking a look here at the 10-year, you know, it's holding on to that breakout. So all of these gains in stocks are great. You know, these companies are reporting stellar earnings, just absolutely phenomenal earnings. The beats across the board have just been like, it's like 25%, like earnings growth is like 25% plus 25% for many of these mega cap companies. So as long as they continue to just print money hand over fist, then you're not going to get some type of a market crash. But this, you know, the yields pushing higher like this eventually will probably start to hurt interest rate sensitive stocks. You know, think Russell 2000 items, and you know, stuff like digital assets. You know, Bitcoin is software. So with interest rates going up, we know that Bitcoin and other digital assets are interest rate sensitive. So if interest rates continue pushing higher, that should be negative for digital assets like Bitcoin. So I'm just thinking to myself that we probably got another leg down, and I would love to be able to buy some BTC at 49K if it makes its way down to this level of horizontal support. So that's really what I'm thinking about here for Bitcoin. Now, Mike, I've got a couple of pieces of deep dive research that I want to get into today. If we
Take it
take
away, brother.
we take a look at Plume, I want to run through the Plume research first. So let's go ahead and take a look at this. I'm going to go ahead and switch gears into that Plume deep dive, and let's take a look at this. And Mike, just let me know if you can't hear this.
Welcome to this explainer. Today, we're diving deep into the fascinating mechanics of bridging real-world finance with blockchain technology. We hear a lot of buzz about tokenization these days, but how does the plumbing actually work? Well, we are going to forensically examine the Plume network, breaking down both the massive institutional promise it holds and, of course, the structural realities lurking beneath the surface.
How do you put a Texas oil well on the blockchain? I know, it sounds like a riddle, doesn't it? But today we're looking at exactly how physical, tangible assets, like actual oil royalties extracted straight from the Texas Permian Basin, are transformed into digital yield that you can hold right in your crypto wallet. It's a really complex pipeline, and to understand it, we first need to look at the network making it all happen. So here is the crucial point. Plume isn't just another crypto network trying to do everything for everyone. It's a modular layer 2 blockchain built on the Arbitrum Nitro stack, and it's engineered specifically as a dedicated pipeline for institutional capital and real-world assets, or RWAs. Basically, it's designed from the ground up to make on-chain finance legally and technically viable for the really big players. All right, here's our roadmap for today. We'll start with the real-world asset layer, then dissect the anatomy of the N-alpha vault and trace the yield pipeline. After that, we'll look at tokenomics and value silos and wrap up with the structural and security risks. Let's kick things off with Section 1, the real-world asset layer. You've got 4 core architectural pillars working together here to embed strict regulatory compliance directly into the user experience. First, there's Plumark, which is a no-code portal that transforms off-chain assets into on-chain security tokens. Then you have Nest, the asset management protocol that actually aggregates the capital. Skylink takes that yield and distributes it across 18 different blockchains. But honestly, the most critical piece of the whole puzzle is the Plume Passport. This embeds continuous KYC, AML, and OFAC checks directly into user wallets. If you don't have the right compliance credentials, you simply cannot transact. End of story. And that leads us to the protocol's absolute superpower. Plume actually went out and secured the high-level licenses required to operate legally. Their builder entity registered with the US SEC as an official transfer agent, which lets them legally manage security shareholder records. On top of that, they snagged a Class M digital asset license from the Bermuda Monetary Authority. This legally sanctions them to operate bankruptcy remote, segregated vaults for institutional clients. This is the legal bedrock that makes this entire ecosystem possible. Moving right along to Section 2, the anatomy of the N-alpha vault. This vault employs a pretty brilliant diversification strategy. Instead of exposing you to the risk of a single asset going under, N-alpha pools capital across multiple sectors. We're talking 35% in corporate debt, 25% in private credit, 15% in trade finance, 15% in alternative real assets, and a 10% safety buffer in liquidity and treasuries. It perfectly balances stable corporate debt with high-yield alternatives, completely protecting your capital from isolated defaults. To really ground this in reality, we aren't just talking about abstract crypto concepts here. We are talking about partnerships with absolute titans of traditional finance. That corporate debt, sourced from a massive $6.3 billion senior loan strategy by Invesco. The private credit connects straight to feeder vehicles from Apollo Global and Blackstone. And those alternative assets, that is literal physical oil extracted from the Texas Permian Basin, wrapped into a tokenized royalty stream that pays out based on actual gross oil and gas production revenues. Now,
So this is what we were talking about yesterday, and both of us were curious to get in more detail about the exact details of this bundle of assets to better understand if they're quality assets or just some trash they cobble together. So it sounds like these are some pretty solid assets in these in these funds, the in alpha vault.
Yeah, I mean, it does seem as though they are higher quality. But the only challenge for me is that with all of the hullabaloo around private credit and
Yes.
problems with private credit, it just makes me think, well, is that 10% yield that you earn in that N alpha vault, is it worth it? Maybe.
Well, and again, just as potentially as this matures, there is advanced strategies that you can do, using in alpha to borrow against and loop and do different things. So potentially you can lever up. But sorry, go ahead.
Oh yeah, no, you definitely can. And so supplying that N alpha, supplying that N alpha token, earning 10% and then borrowing against it at 4%, you got a 6-point spread. If you
Yeah,
apply 4x leverage to that, then suddenly you're doing pretty close to 25% APY.
yeah.
So that is that's pretty attractive, I gotta say.
Production revenues. Now, unlike a lot of crypto projects that just kind of print new tokens out of thin air to pay you yield, NAlpha uses an auto compounding net asset value, or NAV. The math is simple. The value of a share equals the total value of all those underlying assets minus fees divided by the circulating supply. So, as interest accrues from those real world Invesco loans and Texas oil sales, the smart contract is dynamically compounding the on chain value of your vault shares. Let's dive into Section 3, the yield pipeline. So, how does a digital stablecoin actually transform into a physical corporate debt note? It's a seamless but incredibly strict step by step process. First, you deposit stablecoins. Instantly, the Plume Arc engine checks your wallet's KYC and AML standing. Past that, and the digital funds are handed to regulated custodians like Anchorage Digital or UMB Bank. They off ramp those stablecoins into real US dollars and wire them to special purpose vehicles, which are basically legal holding companies to buy the physical assets. Finally, the smart contract mints your alpha shares. Boom. It routes digital deposits right into traditional financial vehicles. And to absolutely supercharge that return, Plume introduces capital optimization. Historically, trying to leverage real world assets on chain was super inefficient. You'd often pay more to borrow than you earned in yield. Well, Plume fixes this with automated looping mechanics. Their optimizer vaults let you automatically borrow stablecoins against your NF Alpha collateral at a discount and then immediately reinvest it. This exponentially increases your base yield while maximizing capital efficiency. Which brings us to Section 4, tokenomics and value silos. Now we have to pivot to a harsher reality. While the vault's value steadily compounds, the native Plume token faces relentless structural dilution. Due to a continuous linear expansion formula, approximately 3.56 million brand new Plume tokens are injected into the market every single day.
Okay, so this is the challenge. This is the problem, because if the chain itself and the assets on the chain and the things that you can do with those assets on the chain look pretty legit, that looks pretty good. But how how can you profit as a Plume token holder from
It's
this?
important to understand. So yeah, please do
That's
go on.
that's the challenge, So look, tokenomics can be changed, but it looks like this thing is just extremely inflationary right now.
To put that into perspective, on an annualized basis, that is roughly 1.3 billion new tokens, expanding the circulating supply. It requires massive, constant demand just to keep the price stable. And that massive, continuous daily emission, coupled with a staggering 1.37 billion token cliff unlock that flooded the market in January 2026, had devastating effects. That sudden tidal wave of supply drove the Plume token's price down an incredible 95.5% from its all-time high. It is a stark reminder of the massive difference between a protocol's total value locked and the actual health of its native token. Think of this entire ecosystem like a walled garden. The institutional capital, the millions and millions flowing in from asset managers, stays locked inside those BMA-licensed segregated vaults. They retain all that juicy generated yield safely inside. But on the outside, the Plume token is only capturing fractional layer 2 gas fees. Because those fees are intentionally kept low for users, the token completely fails to capture enough economic value to absorb that massive daily supply dilution we just talked about.
Right. So we've seen this same type of model over and over and over
Yeah.
again with, so many of the tokens that we've analyzed over the last couple of weeks here. And this is what you need to know before you buy, right? Because, if the Plume token doesn't actually, there's no value accrual mechanism there,
There,
Well,
there is a workaround for that because me and the people in the community were earning a lot of yield off the Plume token, using it in DeFi. So just simply holding terrible. Everything I'm hearing here is terrible. But if you're able to use it in DeFi and earn yield off of it, I mean, I was earning like 300%, when before that TVL drop off and the usage drop off. I was able to supply Plume, and I was earning 300% or more on it, and that's how I built my bag. Is I think initially I bought, I want to say it was like $1,000 worth, and at one point I had like $8,000 or $9,000, just from earning yield. So it's yeah, I'm definitely don't like what I'm hearing about the tokenomics, and I knew some of this, but again, using it in DeFi is how I was earning with it. But continue.
yeah, it looks to me like there's some great stuff going on the chain, but
Yes.
the token doesn't benefit from that. So
No.
The value is totally siloed away from the token itself. Finally, let's look at Section 5, Structural and Security Risks. The reality here is sobering, especially when you look at their L2 beat security profile. First off, the network relies on a highly centralized data availability committee with a 1 out of 1 threshold. That means a single entity controls data availability. Even wilder, the core contracts are managed by a 4 out of 12 multi-sig wallet, which is essentially a shared digital safe requiring only 4 keys to open, with absolutely no time locks. Think about that. If just
Uh,
4 signers are compromised, malicious code could be instantly injected into the network, and user funds could theoretically be compromised with zero warning.
wow,
that's not good.
that's scary. And it's probably just a matter of time until there's some type of exploit of like one of these RWA protocols, where like the keys get hacked and somebody makes off with a bunch of bonds, a bunch of treasuries. So yeah, it's probably just a matter of time until we see something like that.
But on a positive note, Plume has really invested heavily in forensic defenses at the application layer. Heavy, collaborative smart contract audits by top-tier firms like 0x Macro, Spearbit, and Pashov have successfully secured the vault mechanics. They actually caught and patched critical bugs, like a deallocation underflow vulnerability and a share inflation attack that could have permanently locked up user rewards or broken the share pricing mechanisms. So the vault code itself, it's heavily battle-tested. As we wrap up this explainer, we are really left with a fascinating paradox. Plume has built an absolutely incredible, legally compliant bridge that brings billions of dollars of traditional assets, from Invesco loans to Texas oil, right on chain. But the native token securing that very network fundamentally struggles to capture that immense value. So the question you should take away from all this is, can the brilliance of tokenized real-world assets ever truly coexist with a decentralized, heavily diluted native token? Or will the value always remain safely siloed in the vault? Thanks so much for joining me for this explainer. I hope it helped you untangle the deep mechanics of the real-world asset tokenization space.
Interesting. So that was definitely valuable. I thought that Plume was nonsense until going through that research. And now I understand that, not only is it not nonsense, the chain itself looks great, but the tokenomics, not too hot.
It's the
So,
same as Ondo. Ondo Finance and what they're doing, amazing. But the token, in my opinion, is
yeah,
trash due to the tokenomics. XRP and Ripple. Ripple, it seems to be doing great things, but the token, trash. When it comes to tokenomics, it's people need to understand the relationship between the token and the actual, protocol, the chain, the company. And other than the fact that in the ecosystem, the Plume ecosystem, that there is opportunities to use the token, kind of like you would stake or something like that, to earn yield. There is DeFi opportunities for the token to earn, but the tokenomics itself, I mean, and I kind of knew that the tokenomics sucked. It's just but again, there is opportunities when there is volume and when there is TVL, on the network to earn, quite a bit, using the token. So that's really the saving grace for Plume, in my opinion.
yeah, 100%. So here, let's go ahead and switch gears a little bit What I want to take a look at is, this is just coin market cap here. And, since we've been running all of this deep dive research, I really want to be able to, get through like the top 100. And with everything, there's a lot of items here pumping this week. I'm thinking specifically about Hyperliquid, Zcash plus 25% this week. So, there's a couple of projects here that are doing really, really well. And I want to just take a look at a couple of memes. So, if you see these coins ripping, well, why would the meme coins not rip? Dogecoin is an $18 billion market cap coin. And Shiba Inu, down here, Shiba Inu is a $3.4 billion market cap coin. So, on the week, both SHIB and Doge are down as you see coins with actual utility and revenues like Hype, pumping plus 37%. Fresh all-time highs here for Hype. So I put together some research on Doge and on Shiba, SHIB, so Shiba Inu. And so here's Doge. Now, these are the lows from 2024, but I want to just take a look and see, it's still off of the lows from the last bear market, which, were maybe another 40% or so to the downside for Doge. So it's still well off of those lows. Shiba Inu, I haven't taken a look at SHIB in a long time, but SHIB looks like it's basically at or below. It's basically at its bear market lows from last bear. So, why do people hold these coins? Why do these still exist? Is there any, maybe there's a potential for utility that I'm not aware of? I just want to learn a little bit more about these coins because I know that, in the case of Dogecoin and Shiba Inu, that I think that these are layer 1 chains that like you can actually build on top of the Doge layer 1. So I definitely want to learn a little bit more about this here. And so I put together some deep dive research on Doge. Let's go ahead and play through.
Behind the ticker symbol DOGE is a distributed network of industrial server hardware and high-speed fiber optic routing. This infrastructure presents a paradox. A digital asset designed to mock the market operates using highly specific enterprise-grade blockchain mechanics. The 2013 launch by software engineers Billy Marcus and Jackson Palmer used this image to parody the speculative cryptocurrency boom. The resulting internet phenomenon has heavily obscured the actual engineering of the network. Deconstructing the system requires isolating its 3 core structural pillars: a memory-intensive hashing algorithm, a strictly deterministic monetary supply, and sub-minute block confirmation times. Evaluating this asset requires analyzing the architecture layer by layer. We have to mute the cultural noise and look strictly at the transactional engine running underneath. The network's technical lineage begins as a series of forks. Bitcoin utilized the SHA-256 algorithm. In 2011, Litecoin forked from Bitcoin and replaced SHA-256 with a protocol called Script. 2 years later, the developers forked LuckyCoin, a direct descendant of Litecoin, inheriting that exact same Script algorithm. They retained Script specifically for its memory hard requirements, which restricted the use of highly specialized application-specific integrator circuits and kept the mining process distributed. But sharing Litecoin's algorithm introduced a fatal flaw. Miners could rapidly point their computational power to whichever chain offered higher immediate profitability, constantly jumping back and forth. During consecutive halving events in March and April 2014, mining profitability collapsed. The resulting hash rate oscillations drained the network of its computational defenders. The total active hash rate plummeted below 50 gigahashes. The sheer volume of computational power existing outside the network suddenly dwarfed the power protecting the ledger. Without immediate intervention, the system faced an imminent 51% double spend attack. A malicious actor could easily overpower the remaining nodes and rewrite the transaction history, triggering a total operational collapse. In September 2014, the core developers initiated a hard fork. They deployed auxiliary proof of work, a protocol mechanism known as merged mining. Under this architecture, Litecoin miners validate blocks on both blockchains simultaneously, solving cryptographic puzzles without consuming additional electricity. The
Huh.
integration stabilized the system instantly. Within 1 month, major Litecoin pools integrated the software, causing Dogecoin's hash rate to surge by 1,500%.
Wow, I had no idea. So I wonder if this is still the case. Like, do Litecoin miners also mine Doge at the same time? I mean, it's the same script, right? It's the same algorithm.
Yeah.
That's so I
Well,
just
I know when I looked at doing mining, there was a ton of Dogecoin miners, but you could switch between Litecoin and Dogecoin.
I wonder if you can do both at the same time. Maybe not.
That's what this was saying, is that it was, basically it made it to where they didn't have to switch, that you could do both at the same time without consuming any additional power, so that they were able to mine both Litecoin and Dogecoin at the same time, if I understood what it just said correctly.
Yeah, that's what I understood too. And we ran some deep dive research on Litecoin a couple of weeks ago,
Yeah.
and what we learned about that is, Litecoin is getting ready to, if they haven't already, launch smart contracts.
Hmm.
So imagine smart contracts on Doge, right? Denominated in Doge. That would be pretty cool, actually. I like
Well, I
that.
mean, it requires smart contracts to do DeFi and things like that. So I mean, it does open a lot of functionality and use cases.
Yeah, yeah, 100%. Smart contracts means, financial products. That means, user growth. So,
Yeah.
This data visualization tracks the long-term impact, showing a hash rate correlation coefficient of approximately 0.94. The network survives today because it successfully parasitized the industrial-scale infrastructure of a larger chain, permanently securing its ledger against 51% attacks. With the cryptographic layers secured, the economic design diverges sharply from the industry standard. While Bitcoin utilizes a hard supply cap to create deflationary scarcity, this protocol relies on an infinite deterministic inflationary policy. The parameters are fixed. The network issues exactly 10,000 new tokens per block. Because block times target a 1-minute average, this minting process occurs perpetually, with no future halving events. This dynamic is governed by a strict equation. With 10,000 tokens generated every minute, annual issuance equals exactly 5.256 billion tokens. Because this new supply is a fixed integer, as the total circulating supply expands over time, the inflation rate programmatically decreases. It reached 3.12. If users lock their holdings in cold storage for extended periods, they face a built-in economic penalty from the expanding supply. That penalty serves a structural purpose. It drives constant transactional throughput. The system forces liquidity into the market. The lack of a supply cap is not an oversight. It is a calculated mechanism meant to prevent a static store of value, forcing the token to operate as an active medium of exchange. However, the real-world distribution of this token heavily contradicts its intended use case. The transactional utility is actively threatened by extreme wealth concentration. As of 2026, the data shows that out of millions of participants, just 100 wallet addresses control approximately 62% of the entire circulating supply. This data table tracks the specific holders at the top of that hierarchy. The largest individual address is Robinhood's cold storage, holding 17.72. The foundation of this
wow.
update is libdogcoin, a lightweight C library allowing developers to implement core protocols into high-level languages without spinning up main nodes. Developers applied this library to build mobile wallets utilizing secure enclaves, optimizing validation times to 40 seconds. This connects directly to GigaWallet's dual API framework, allowing enterprise merchants to self-host transactional infrastructure rather than routing payments through third-party processors. Webhooks confirm online purchases at the backend level instantly, while the mobile SDK pushes the final payment request directly to the consumer's device. The cryptographic private keys never leave the user's phone. These modular APIs transition the network. Instead of forcing merchants to interact with a monolithic ledger, the system now functions as a highly integratable backend e-commerce processor. That e-commerce layer is geographically limited by standard internet access. To ensure global uptime, the Foundation engineered Radio Doge to execute non-custodial transactions in completely offline environments. This system transmits transaction data over high-frequency and LoRa radio networks. It allows regions lacking stable internet infrastructure to broadcast localized payloads directly to ground-based receiver nodes. Those ground receivers are physically connected to Starlink terminals, which bounce the raw transaction data through satellite links and push it straight into the main peer-to-peer network for validation. As the network expands, securing its edges requires adjusting protocol governance. Following a successful 51% attack against the Monero network in 2025, Director Timothy Stebbing proposed Project Sakura to fortify defenses via Layer 2 scaling. Project Sakura introduces a hybrid consensus model. It adds an optional community staking mechanism to validate checkpoint transactions on Layer 2, while strictly preserving physical script mining on the base consensus layer. The hybrid design scales transaction volume infinitely at the application edges, without rendering the core industrial miners obsolete or compromising their economic incentives. By 2026, the protocol transitioned from community project to structured corporate entity. A reverse takeover transaction allowed the newly formed House of Doge to list publicly on the Nasdaq under the ticker TBH. This institutional...
Okay, we got to take a look at this. TBH, the House of Doge. So I've got to take a look at this. I bet it looks just like the Doge chart a little bit. TBH, Bragg House Holdings. Is that what this is? I think this is the right one. Bragg House Holdings, TBH. I mean, it doesn't look good, so it probably is the right one. Oh man. So this is actually pretty interesting, Mike. You know, this chain, this Dogecoin chain, it seems as though people are working to build something here. I can't.
They have for a while. They've been trying to build out an ecosystem, on Doge and Sheep. The Shibarium was, kind of the ecosystem that Sheep was building out, and Dogecoin. They've been hyping forever because Elon took a shining to it because I think one of his employees turned him on to it or something like that. And so during the last bull market and through the bear, anytime that he would, Elon had a Shiba Inu for a while, which is the picture that's the type of dog that both Sheep and Doge are. And so anytime he posted anything about his dog or it would send Doge, pumping. So, it's just that, whole hype thing. But yeah, they were trying to build it out and they were trying to say that he was going to use it on X, because he was going to make, X a banking app and stuff like that. And it was going to be the crypto that, fueled, all of that. But all speculation, all pure speculation.
Well, Mike, there's like a tapping sound that I keep hearing. It sounds like it's coming from the mic. I'm not quite sure, but yeah. So for Doge, I'm really, it's interesting to hear this, or to hear more and learn more about the Doge infrastructure. I'm trying to figure out how that drives value for the token holders, though. Like I don't understand that part yet. Yeah, exactly. It sounds like a woodpecker. That's what it sounds like. Here, let's keep playing
this. Brought massive treasury management frameworks into play. The company now systematically deploys the network's payment infrastructure directly into esports venues and collegiate merchant networks. The entire stack is fully operational. We have the application layer running GigaWallet and libDogecoin APIs. Below that sits the deterministic inflation curve driving transaction volume. And defending the entire structure is the base layer of Oxpaw merged miners.
Okay, so I see a problem here. When they're talking about this economic engine, how does deterministic inflation drive transaction volume? Like, how does that actually drive volume and value for token holders? I don't see how that incentive works. Um, that doesn't make sense to me. So I'm going to keep playing this, but as we're going through and learning about Doge, I'm trying to figure out like where is the value creation for token holders? I don't see that here.
These interlocking layers provide a technical environment where industrial mining power defends the ledger, while modular APIs facilitate commercial throughput at the edge. The vulnerabilities of 2014 almost destroyed the ledger, but solving that cryptographic crisis allowed the development team to stabilize the infrastructure and implement their desired macroeconomic policy. The network functions precisely because it rejects digital scarcity. By engineering a strictly defined, infinite supply system supported by industrial security, the protocol succeeds in its mandate, acting as a rapid, functional processing rail for global micropayments.
I mean, not really. Like, so, okay. Now that I know a little bit more about, Doge, I think I know enough now to know that I don't want to hold it. Um,
No,
I don't see any value creation there. You know, I
it's a pure speculative, community based, usual meme token. It's just it's kind of the OG of meme tokens.
Yeah, and for what? Like, if you've got limited capital, and we all do, everyone's got limited capital, right? You got this precious amount of limited capital that you've got to allocate to, only the very best opportunities. And if I'm looking around the digital asset space and I've got limited capital that I need to allocate to buy something, there's no way in hell I'm buying Doge. Like, even if I wanted to gamble on a moonshot, I wouldn't buy Doge. It's
Well,
just,
I mean, look at the market cap already.
yeah. I mean, the market cap, if we bring it on over here to coin market cap, is $18 billion. So like, if you buy Doge at 10 cents and you think that you're going to double your money, that's a $36 billion market cap that Doge would have to get to for you to double up. And you would need to see that happen quickly because this thing inflates to the tune of 10,000 tokens per minute.
There's just so many other better plays. Why? Why would you gamble on such a large market cap meme coin that's inflationary when there's so many other better projects out there?
Yeah, no, it doesn't make any sense to me.
In August 2020,
Okay, so this one is about Shiba Inu. So now that we've learned a little bit about Doge, and like basically the bottom line for me is no, thank you. Now I want to learn a little bit about the other big market cap meme coin, Shiba Inu.
An anonymous developer named Ryoshi launched a digital token, a meme coin built strictly to capture the retail speculation surrounding Dogecoin. Over the next 6 years, the development team transitioned that single asset into a multi-tiered Web3 ecosystem, complete with a custom Layer 2 network, a decentralized exchange, and an algorithmic stablecoin protocol. That evolution culminated in May 2026, when the U.S. Securities and Exchange Commission officially classified the core token as a digital commodity. That specific regulatory designation removed the legal uncertainty surrounding the asset.
Okay, so how the fuck is this a commodity? Like, come on, man. Come on, man. What's this?
Placing it in the same class as Bitcoin and Ethereum, and cementing
Ah,
a multi-billion-dollar market capitalization.
what? Oh my God. Dude. Wow.
But looking at this dual-axis chart reveals a severe contradiction. While the core asset maintains a multi-billion-dollar valuation, Shibarium holds a total value locked of less than $180,000. The network processes an average of just 700 to 3,000 daily transactions. By every technical definition in decentralized finance, it operates as a ghost chain. To map the origins of this disconnect, we have to pull apart the ecosystem, examine the mechanics of its 5-token economy, and run the math on its programmatic burn protocols. When an asset secures SEC commodity status and deploys a custom scaling solution, yet fails entirely to attract decentralized finance capital,
standard crypto valuation models break down. Shibarium functions as an Ethereum Layer 2 scaling solution, specifically utilizing an EVM-compatible hybrid sidechain architecture. It relies on a standard base layer, the Ethereum mainnet, which serves as the anchor point to manage the security deposits of the network's node operators. This 3D schematic breaks down the infrastructure below that anchor. Data flows from Ethereum into the Heimdall validation layer, responsible for coordinating validators and producing checkpoints. Below Heimdall sits the Bohr block production layer, the EVM-compatible environment where low-latency execution of smart contracts takes place. Network security across these layers is maintained through a proof-of-participation consensus model, requiring operators to stake a minimum of 10,000 Bone tokens to run a validator node. To understand why this system fails to attract capital, we have to measure these specifications directly against the dominant players in the scaling market. This matrix outlines the technical gap. Shibarium yields a block time of 2 full seconds, while Arbitrum achieves 0.25 seconds. That performance gap correlates directly to capital capture. Arbitrum and Base secure TVL in the high billions, while Shibarium stalls out at $178,000. Furthermore, Shibarium lacks the deep institutional integrations and native stablecoin liquidity networks that Coinbase built directly into the Base network. Relying on older, unoptimized architecture guarantees a severe deficit in developer mindshare. Without developers building competitive applications, Shibarium cannot generate the network effects required to survive in the Layer 2 market. The ecosystem complicates its architecture with a multi-token model designed to segregate specific functions: general utility, network gas, and protocol governance. Looking at this constellation, the core SHIB token is the native asset. Bone functions as the operational gas and governance token. The remaining nodes handle secondary functions. Leash gates virtual land, Treat rewards privacy and AI initiatives, and She acts as an algorithmic stablecoin.
This is retarded, dude. Like,
Yeah.
like who decided that this was a good idea? Like,
Like I said, I tracked this for a while, and after it came up with Shibarium and started doing Leash and Bone, and it was just like the little bit of liquidity that was in this project, it just got fragmented, across all these fucking other tokens that they launched, and it was just silly to watch.
yeah, this is very, very, very strange. And the fact that if we just bring it on back to coin market cap for a second, the fact that this thing, if we just take a look at its market cap, Sheeb is number 29. So
Yeah.
Sheeb is in the top 30, man. Like,
It was in the top 10 at one point.
that's so crazy to me because there's, now that we know a little bit about Doge and that we're learning here about Sheeb, like, why does this even exist at all? Like, there's no value creation layer here at all. And now that we've gone through in the top 50, these top 50 projects, we've gone through a lot of these so far. And, there's, one of the best examples of a valueless coin is XRP. It's in the top 5. You take a look at something like Unis said Leo. This is basically just like synthetic equity. If there's ever a problem with, Bitfinex, then, Leo is going to have a problem there too. Cardano ADA, like, what does this thing do again? I need to run some deep dive research on Cardano. I think that
No,
that'll be
honestly, we
interesting.
should. I mean, because I know that it's a very popular token that people seem to. I just all the research that I've done, I'm just not seeing it. I mean, they just barely got stable coins on it.
Right, exactly. Yeah, I agree. And then, you take a look at something like Bitcoin Cash. I'm pretty sure that Bitcoin, well, exactly, Y is right, but aren't they? We ran research on this a couple weeks ago. I think that there are like smart contracts on Bitcoin Cash now, kind of, sort of.
Yeah.
But it's like, okay, well, great. There's smart contracts on Bitcoin Cash, but it doesn't have the DApp layer that Ethereum and the EVM chains have. It doesn't have the user base that those chains have. No one's seriously talking about using Bitcoin Cash as a treasury asset. So, like, how does this, command a $7.6 billion market cap? You take a look at something
Pretty
like
much 95% or more of them is pure speculation.
exactly, even something like Toncoin, which, I quite like being able to send stablecoin value on Telegram. I
But is
like
there
that.
what is that? How many billions of dollars?
Five,
Is there that
yeah.
much value in being able to send value over Telegram,
So the
using
tokenomics. So Mike, when we ran the research on Toncoin, the tokenomics are pretty bad. Um,
yeah.
so and then as we just go down this list, you want to talk about bad tokenomics, talk about SUI, horrible tokenomics. For Litecoin, I'm pretty sure that Litecoin has some type of smart contract layer now, but so what? Like every chain has some type of smart contract layer now. So like
Totally.
why does
And then you got to get into, how is it being used? How is it being adopted? How, what value, is it generating?
yeah.
It just there's so many other factors that, long term that you need to take into account.
Yeah. So, here that we've got just a couple minutes left. I want to see if we can get through this on Shiba Inu. I just want to know more about it, just so that I know exactly why I don't like it.
The sound went away.
I know I still hear it
Yeah,
sometimes.
I know. Can't hear it, David.
Oh, got it. Let me go ahead and restart that screen share. I wonder why it does that. Um, there we go. Shiba Inu. Cool looking dogs, though.
Steered by lead developer Shitoshi Kusama and a highly concentrated circle of administrative contributors. The actual constitutional rules governing the network contain specific override provisions. During systemic shocks, designated crisis squads possess the authority to entirely bypass standard DAO voting protocols. This
That's
centralization
horrible.
intersects with severe regulatory exposure. The SEC commodity classification protects the primary token, but the multi-token web remains vulnerable.
So, how in the world did this get commodity status? Like, uh, how? That it doesn't make any sense. Same thing with Doge.
The yields generated on the decentralized exchange and the algorithmic mechanisms stabilizing the SHE-PEG are prime targets for restrictive SEC and European MiCA enforcement.
A 5-token system managed by administrative emergency overrides undercuts the baseline institutional trust required to attract major liquidity providers, utilizing a highly unconventional distribution strategy. The developers transferred 50.5% of the supply direct.
So, I got a problem with this guy. He, how is it that Ethereum is classified as a digital commodity when this dude is, basically running the thing, with his
Yeah,
team? Like, how is that a commodity and not a security? I don't understand that.
I don't know. But
Yeah.
I remember what this is talking about when they sent like half the supply to Vitalik and he burned it.
I mean, good for him,
Yeah.
That's pretty cool. But yeah, yeah.
To the public wallet of Ethereum co-founder Vitalik Buterin, acting as a decentralized trust signal. In May 2021, Buterin executed the foundational supply reduction event by permanently locking 410 trillion tokens in an irreversible debt address. He donated the remaining 50 trillion to India's COVID-19 relief fund. To institutionalize
What?
that deflationary pressure, the developers introduced the ShibTorch v2 protocol. This system integrates programmatic burning directly into the Layer 2 scaling network.
So I knew I didn't like him. He gave all this money to India? Like, what? Dude,
COVID.
what?
When users transact on Shibarium, they pay gas fees in Bone. 30% goes to network maintenance, while 70% enters a burn contract. Once this pool reaches $25,000,
Anyone can initiate a process bridging the tokens back to Ethereum to be burned. But the underlying mathematics expose a structural flaw. With Shibarium generating only hundreds of transactions a day, capturing 70% of fractions of a cent has virtually zero mathematical impact on a circulating supply of 589 trillion tokens. Programmatic fee-based deflation mechanisms simply cannot dent high supply assets unless the underlying network sustains exponential industry-leading transaction velocity. Because the automated tokenomics are ineffective, the actual price action of the asset is dictated almost entirely by the on-chain wealth distribution profile. Headline concentration statistics often claim the top 10 wallets control over 60% of the supply. But that figure is analytically distorted by the inclusion of non-circulating entities. To find the true baseline, we strip away the 41% in irreversibly locked debt addresses, then separate the 20% held in exchange wallets representing retail. This reveals the active market, where the top 100 private whales control 57% of available tokens. This creates severe structural manipulate order books, pumping or suppressing spot markets at their discretion. In early 2026, exchange reserves plummeted. 80 trillion tokens flowed directly out of liquid exchanges and into private self-custodial wallets. That withdrawal represents structured accumulation by whales, yet the asset's price failed to appreciate. This indicates that buying power on exchanges is exceptionally weak, unable to capitalize on a shrinking liquid supply. Combining low retail buying power, low futures open interest, and massive private spot power sets up a highly dangerous market condition: the threat of rapid, cascading long liquidations initiated by early accumulators. This wealth concentration proves that even if Shibarium's technical infrastructure improves, everyday retail investors are fully exposed to unilateral liquidation events dictated by a few dozen early adopters. Evaluating the long-term viability of this entire ecosystem requires connecting the tokenomics back to the underlying network utility. The intrinsic value of any telecommunications or blockchain scaling network is modeled using Metcalfe's law. This equation states a strict premise: network value is proportional to the square of connected users. Applied to Shibarium, a total value locked under $180,000 and under 3,000 daily transactions indicates a fatal absence of users. It has no multiplier. Despite this lack of organic utility, narrative-driven retail demand frequently targets a speculative token price of 1 cent. That target is mathematically impossible. Multiplying a 589 trillion token supply by 1 cent requires an implied market capitalization of $5.89 trillion.
Dude.
This valuation would make the asset worth significantly more than Apple, Microsoft, and the entire existing cryptocurrency market combined. Without an unprecedented influx of third-party developers building high-volume applications to fuel the Layer 2 burn rate, the math dictates the outcome. The multi-token Shiba Inu architecture is structurally bound for capital stagnation.
Wow. Well, now we know what not to buy.
Yes, yes. Well, Plume is up 12% on the day. Due to our deep dive.
I love it. I love it. Taking a look over here at Plume, if we just take a look at the token itself and zoom in here a little bit. Where is there some resistance? Well, right there, 1.6 cents. So yeah, it's got a little bit more room to run on the upside, I'd say. But yeah, I mean, we're getting pumps out of a bunch of alts today. Arrow plus 7%. You got something like Sui plus 5%. You got
Bitpincer's up 5.5%.
Oh yeah, let's take a look at Canton. CC plus what I see is plus 3.7%, up at 16 cents. You got Hyperliquid. Made some fresh all-time highs today, currently up 6.8%, trading for about $59 right now. You got Tron getting very, very close to a level of resistance. If it breaks out, it probably heads to 45 cents. And then I think Zcash making some moves, I think. This one looks like it definitely could put in another big ass pump. I mean, 677 for Zcash, but it's sitting at those old highs. So one more pump out of Zcash. If it breaks out above 750, then it enters price discovery again, and this thing could double like quickly. So yeah, big moves going on. And if you take a look at the king, BTC, sitting at 77.6, it's just, this is such a bearish pattern though. This bear flag and then this rising wedge falling out of the rising wedge. It's just so bearish. You take a look at Ethereum just clinging to support, for dear life here. And then Solana, same thing. Solana putting in, a nice bounce at this level of support. So that's good to see Sol bounce like that. But these look like, out of the majors, these look like weak rallies. If I was going to buy something now today, it might be, Tron or Hype or Zcash, or maybe even Canton if I wanted to hold that for the next couple of years. But when it comes to the majors, I can't bring myself to buy here. I just want to be a little bit more patient. So,
absolutely. All right. Well, we appreciate you all tuning in, and the blockchain report should be going right now. If you want to go over there and check Jeff out and one of his deep dives later on today, 1 p.m. Pacific, 4 p.m. Eastern. David will be doing his market wrap, so 15, 20 minutes of technical analysis. And today he will also be doing his live coaching with Ellie. So if you want to catch those, and tonight we have the red pill. I haven't decided what that topic's going to be, but I'm sure it will get spicy. So we still have plenty of live shows the rest of the day, and hope to see you there. So till next time, Veteran Crypto out.
Peace.